Asutosh Mishra, who has over 18 plus years of market experience, and primarily he had been associated with great reputed firms, and I mean, from almost 2 decades he's into equity research, and primarily he has been focusing on banking, insurance, and NBFCs. During our conversation, we'll be holistically covering about the present situation of banking crisis and the position of banks within India and the segregation of private and PSUs. So basically, the discussion will cover the sector. We try our best cover the holistic picture so as to remove all the confusions which you have. So with this, I request Ashutosh sir to basically we start always with the journey of the guest. So Ashutosh sir, how it all started for you?
So, journey all started that I was working in a commodity market as a sales cum dealer guy, and there I used to trade across the market, different global market. So there is one client of mine who was basically in a lot of forex trading. So he used to, for him, I used to take a lot of position across the geographies out there, and a lot of macroeconomic concepts and all these things came. So that what forced me to think about, okay, let's do something, let's study something more about it, and that's why I no way back start doing the CFA from ICFI in 2003 2004, and from there I got in this field, and slowly each and every day is like, you have to learn something new. You have to every time you always get a something to see new, something which is really challenge you at every point of time. So that's what interested me, and I don't know how quickly this time has passed, but yes, I'm really thoroughly enjoying this whole analyzing the especially BFSI and equity market as a whole. Yeah. So shall I go ahead, Prince?
Yeah,
Yeah.
please carry on.
So, today our discussion will be mainly focused towards a lot of things is going on around in the if you look at noise is being made on the banking sector, whether it is second Lehman crisis type of situation into the global scenario, and what can be the impact on Indian banks, where we stand at this point of time. So I will start first, a little bit comparison between, what is difference operating environment in which a global bank operate and normally the Indian bank operate. And then also took you to the little bit of regulatory and historical part of the Indian banking sector in that context out there. So in that, I will just start first from the on a if you look in the, like US European markets, that they are they are still not on a regulatory environment wise similar to what India is currently practicing it. Why I'm telling it? Like in European banks, still they have not implemented the Basel III. So what is this Basel all about? So basically, when 1980s banks started coming under the problem, then major central bank across the world came together in the Switzerland city Basel, and they sit together to put some of the international norms so that across the world banks can follow each other, follow individually, and then they can then these banks can interact with each other in the international market without worrying about that no one banks will go or fail with no. So so they come out with the first set of rule, which is called Basel 1, then the Basel 2, and then Basel 3. So still, if you look, European banks are still majorly transiting from the Basel 2 to Basel 3. India, in way back in 2014-15, has moved from the Basel 2 to Basel 3. Already, we are at a very stringent regulatory conditions compared to European standard. many of the US, when compared to the US have a surely a federal bank regulation, and then every state has some or other type of different set of regulations in the US. So California has its own set of regulations, and New York will have its own set of regulations out there. So few, or we say the major state in the US has implemented the Basel III regulation, which is relatively stringent and put a lot of onus on the bank to manage the liquidity and disclosures. But uh, but still, few of the U.S. states and especially local area banks in the U.S. are not very well prepared on that front, and that's why, when we have seen 2008 crisis or 2023 crisis, or 2008, 2013 or 2023 crisis. Uh, uh, Normally, we hear about a lot of trouble in the U.S. bank or chain reactions in the U.S. bank, but we normally does not hear similar type of things in India. In 2008, there was a little bit rumor about ICICI banks, but that was controlled very swiftly. 2020, we have some little bit rumor about Yes Bank, and that too, RBI literally bailed it out in a very, very innovative way. And if you look at current template across the globe, they are trying to copy what RBI has done at that point of time. So on regulatory environment, Indian banks are much better suited compared to their global peers, and that there where the resilience in the balance sheet is being seen at this point of time. If you look, I'm tracking the sector from roughly, if say 17 to 18 years, but currently Indian banks' balance sheet are in the best quality in my, at least in this 18 years. I have never seen Indian banks to be such a healthy capital level, such a healthy profitability level, lowest asset quality issues. Asset quality is at best in the last 2 decades, and the growth opportunity is looking clearly. So everything is coming together at this point of time. What is currently, whatever the sell-offs we have seen, yes, it was sector which is control 35% of the global benchmark, and global funds are mainly holding the banks. So whenever they want to exit part of the emerging market or India, so sell-off will also come into the sector. So I see this sell-off more as an opportunity or volatility rather than any risk emerging in the balance sheet of the bank. So from that perspective, I clearly see no. Uh, we need to focus on banks which are really able to capture the growth India growth story, which is panning out in a very, very good way. So now a little bit I will take you to the regulatory structure of Indian bank. And before that, I'll just explain you, we all have discussed, if you look, Silicon Valley banks, why they collapsed and all. No, so Silicon Valley Bank was similar of a size of HDFC Bank. So I will just compare between Silicon Valley Bank and HDFC Bank for a 2 minute out to explain you out there. So Silicon Valley banks, if you look their liability side of the profile, the deposit or liability which we call on a bank, the money which they received from the market, and so their major part of the liability of the Silicon Valley was coming out from the large bulk deposits, and a relatively very small portion was coming from the retail. Whereas what they have done when this large chunk of deposit was flown into their system post 2020, when Fed start printing money, so what they did is that they start buying the bonds. So major part of their assets. So if I say a large part of the liability was coming from that point, and these are callable at any point of time, these depositor can call back their deposits. On the other hand, the large part of their liability asset were coming from they have invested these excess money into the GSEC, US GSEC, and US mortgage-backed securities, and both yield were very low till a year back. because interest rates were at the lowest level in the US. So suddenly, when Federal Reserve took the interest rate up by 5%, what happened? That those papers which were earning much lesser yield is now getting valued much lower. So in a layman term, I will explain you. Suppose if you are holding, if suppose a bank A issue a bond to you, and you are holding it at 5% interest rate, and today's interest rate is 10%, will you pay 100 rupees for the same bond, which is 100 rupees face value of the bond with a 5% yield? You will not pay the similar price, so you will pay a much lower price, much lower than the 100 rupees. So there is a decline in the value of asset which they were holding in. And then some of these depositors start calling back their deposits, and this is what a circular problem started. And finally, despite having a very good quality of asset, they are not able to liquidate those assets. Whenever they are trying to liquidate those assets, also those liquidation were happening at a much higher loss. And once they report that loss into the market, the further fear mongering started. And ultimately, if all the depositor of the banks will start coming and trying to take out the deposit of the bank, any bank in the world will collapse. And that's what happened with the SVB. Now, compared to similar type of situation in India, I will take the HDFC Bank comparison, because in the size, roughly in the size they were, we can compare them at a same level. So in the case of HDFC, your deposits, major part of the deposit is coming from retail, and that too distributed. So someone like us, 20,000, 50,000, 15,000, 5,000, 70,000, 80,000, so many. So it is not a bulk deposit, that not only few thousand depositor, which is contributing to the roughly 13, 14 lakhs crore of the balance sheet of the HDFC Bank. But there are more than few lakhs. If I say that more than 7 to 8 lakhs depositor are adding up together to that. So this spread the whole thing in a much greater way first. So deposit is much more retailized. Deposit is much more granular in nature in the India. When you come to asset side also, asset side, they have invested in the bond. But here we have, if you look at HDFC invests the minimal amount in the bond, which is requirement of SLR and CRR, not more than that. So in that situation, they have only invested roughly 19.5% of their portfolio in SLR, and few in a corporate bond. Rest of all their loans were to the borrower like us. Like we have a credit card, we have a home loans, and other part of it. So they have given or some business loan, vehicle loans. And here mark to market does not comes into the play when it comes to the pure loan, which was impacting the SVB. So even if interest rate has gone up sharply in India, which is much lower than the US also, but what we clearly see that the mark to market problem which we have seen in the US, similar type of situation is not there in India. And that's why no, if you see the overall construct of the balance sheet, overall profile of the banks, the way the banks do the business in India, the regulatory environment, all are much more superior. Many times Western country used to always say that okay, they have much better regulation in other part. But when it comes to banking, RBI is considered to be one of the best regulator, and that's why we have our regulator Saktikanta Das has got the best central banker of the world award in the last year. So RBI as an institution has managed this thing very well, and they continue to evolve and take more and more proactive steps. So this is what put really Indian banks in a very good condition. So yes, at this point of time, money flow is negative, and because of that, we are finding selling into the banking stocks. But that's why I see this is more of volatility in the stock rather than any risk emerging in the balance sheet out of that. Yeah, Kaushik, you want to ask something?
Yes, sir. Sir, is it looking like something like it's like we have spoken about this a lot of times, but my major question is going on: is it something looking like 2008 financial crisis? because a lot of banks are like also having interconnect, and that's leading to another bank also collapse. Or is it not something like that? Is my understanding wrong? Or what is the situation current?
So if you look at the global market, 2008 was having a similar setup what is 2023 started at. So when Bear Stearns collapsed in the March of 2008, US regulator bailed it out. Okay. But when Lehman start coming under the problem, they decided not to bail it out. Okay. And there where the different response comes into the play, because they didn't bail out Lehman, the whole crisis, the interbank liability and other things comes into the play. So this all depend upon whether, suppose in the case of Credit Suisse, Swiss authority came, pitch in, and they provide liquidity, they provide bailed out Credit Suisse, or completed the deal with the UBS. Similarly, in the case of Deutsche Bank, if Germany government does not interfere, if the situation get further worse from here, then we may see same 2008 scenario. But ideally, we should not, because 2008 there was another thing. There was a politics involved in 2008 in the US, because the US election has just had completed at that point of time, and the Treasury Secretary of the US at that point of time was ex Goldman Sachs chairman, and he has what I understand, that he has some special enmity with Lehman brother, and that's why instead of bailing out Lehman and averting the whole crisis, he decided to let Lehman collapse. Okay, so this was more of a political or other side of the story. So at this point of time, I don't think so. 2008 type of situation is happening, but similar, but something different risk is emerging at this point of time. What risk? Is that risk of that dollar as a dominant currency in the world is getting challenged. What you are seeing it in what is happening in China front and Russia front, and the way, if you go back in history and see to 1972, US did a deal with Saudi Arabia for petrodollars, and then dollar become the dominant currencies post the Bretton Woods system also. But till 1971, dollar was a Bretton Woods part of Bretton Woods system. So in 72 they do the petrodollar, so they literally made Gulf country to sell only all the oil in the dollar, and that's why dollar becomes so prominent currency in the global level out there. So something is what had happened the last year when US freezed the asset of Russian central bank. Suddenly across the world, central bank has become very vigilant about their dollar assets, and this rise, sharp rise in interest rate in the US, geopolitical tension which is taking place at this point of time, is creating a lot of flurry into the forex market at this point of time, and especially fight between China and US. And the way now the deal is broke between the Iran and Saudi Arabia by the China. So we are going to see very different type of risk emerging in this scenario, even if it will be not like 2008. What I clearly see, that there will be something is going to happen in next 1.5 years, because at a global level, lot of problem is there. This the currency printing post COVID, which the Western world has done, they have to pay prices for it. How the things will emerge out, I don't have clarity over it at this point of time. But when I read available history of 6 to 700 years of the currencies the human we human are using currency from the last 700 years, we clearly find that some similar type of situation has or in the past, and that has resulted into newer risk. Whenever the currency shift takes place or something start taking place, at that point of time, because bank is very correlated with the currencies and the bond market, so they face a very difficult problem. So there I clearly see some of issues can come into the global banks front. But if you focus on a domestic bank which is mainly doing business in India, not much related to the overall global front, I don't see that getting impacted Indian market. India is managing this whole scenario much greater way, much better way, and that's why I see, even if suppose any of these risks comes into the play over the next 1.5 years, we will be very less impacted by the overall scenario.
So that means you're trying to tell that India is currently bottomed out and this is a good time to hunt in the market?
It's very tough to say it is bottomed out there, Kaushik. But what I clearly say that value is very no strong at this point of time in Indian banks. If you look at the Nifty earning, so we are expecting roughly 18 to 19% earning growth in the Nifty. And if you look within the Nifty company, which is the highest earning growth is expected to come from the banks. And is that going to change? Uh, no, we are not going to see any significant change in the bank earning trajectory. For the next 2 to 3 years, what we are going to see a relatively healthy loan growth. Our loan growth used to be no, in the 6 to 7% range between 2017 to 2022. This year, we have come out roughly 14 to 15% of loan growth. Uh, 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 our NIMS, if you look at all the banks, margins has improved across public, private. You see, it has improved across the line. Our credit cost at a historical low. If I between same period of 2016 to 2022, credit cost used to be always in between 2 to 2.5% for the Indian bank as a whole. Now it has reduced to less than 1%, and for the 24 and 25, I clearly see it to be remain at 60 to 70 basis point for the system as a whole. So benign credit cost, very strong operating profit growth clearly put banking stocks in a very favorable situation. Only thing is that no, when global investor comes and sell off India as a basket, so whatever they are holding in India, they are going to sell proportionately. So they are going to sell Reliance, they are going to sell ICICI Bank, HDFC Bank. So that's what we are witnessing at this point of time.
So Ashutosh, like if we talk about the credit cycle, so can you walk us through like how you see cycle at this point in time where we are in the credit cycle, and on the top of that, like you talked about the banks, right? So we are poised, we agree, but if we have to make a segregation on the basis of which one is looking more aggressive, the private banks or the PSUs or maybe the microfinance or the NBFCs, so which pockets you are saying ought to comparatively ought to do good in such times? Yeah.
Okay. So I'll start with a very good question. So I'll start with first part of credit cycle. So I will take 5 minutes to explain you the credit cycle and what has changed in India. It is very unique to India, which has happened there. So no, there are so many people are here, and all of we know that India is the only country which has revolutionized the whole payment system using UPI. And on the other side, because of the Aadhaar and biometric, we have eliminated the whole concept of forged document and other thing. In world, you cannot go and open the bank account in a 5 minute with all KYC compliant. In India, only country at this point of time which all KYC compliant with minimal risk, you can open a bank account at this point of time. What this means? So, a lot of things has happened over the last 5 to 6 years. The most important change was the Aadhaar. When Aadhaar comes into the play, if you go back 10 year back, people used to have a multiple PAN card, and they used to take loan from bank A from the PAN card number one, loan from bank B from the PAN card number two. They have different addresses and different things. Today, you go to any of the banks underwriting for the retail borrower, you will find that this decision is automated. Today, and with the data aggregator coming into the play, now much more behavioral data is also start getting captured into the banks. Behavioral data also, because we are using UPI in data aggregator now. A lot of other source of the data will start flowing into the banks from the other sources. So what is happening? No, the underwriting practice, especially on the retail side, has significantly improved it. And I will just tell you, when the COVID started, many of us were thinking that no, the type of problems which we have faced as a society, probably we will see 7 to 8% NPA in a retail portfolio. What was the actual NPA? 3 years has passed. So actual NPA from the retail comes to roughly 70 basis point, not the not the 7 to 8% what the normal market or economists were projecting. Some of the economists were even going to 10 to 12% of the NPA will come. You were amazed to know that the loss given default LGD ratio means out of all the loan dispersed, uh, uh, HDFC Limited has only written off, which they are not able to recover the fully was of the portfolio of more than 5.5 lakhs crores. If I say was less than 30 crores in their history of roughly 25 years. So housing loan portfolio of India is so robust. Okay, and that constitutes 30% of the portfolio. So coming to other even retail credit card portfolio, you can always look SBI cards. So there is a lot of because of the Aadhaar linkage and system getting automated today. Even if I am a bank officer and my son's credit score is not good, I cannot fund them. Earlier, they used to get funding easily. So the whole credit underwriting practices has taken 360-degree turn in India, and because of that, we are seeing the such a sharp increase in the retail loan growth and almost negligible increase into the NPA. Now coming to society behavioral impact. So you can go and check within your circle. I have done this check across the line, that no, even to auto walas, to sabji walas, everywhere. I try to take कि आप लोन लिए हो क्या? तो yes, मैंने लोन लिया है. तो मतलब क्या कभी डिफॉल्ट किया है क्या? नहीं, डिफॉल्ट कैसे करेंगे सर, स्कोर खराब हो जाएगा. So today the guy who's no, on a daily wage earner or everything, they also understand the concept of the scores and everything. They know that if their score will be once bad, it will be very tough to change it. So at a societal as a society level also, this change in the underwriting practices is very effectively carried out, and that's why I clearly see that no, at least on the retail side, we are not going to see the asset quality problem for next three and a half year, next 3.5 years. At least I have that much visibility to speak up at this point of time. Now coming to corporate side of the underwriting practices. 2012-13 was a very unique years where Indian banks were in a total mess. And there RBI started a very important system of collect. What was the collect? So like retail, all the data get reported to the four of the credit rating agencies. Clinic was started by the RBI. What RBI said that all the bank loan over 5 crore, RBI will collect the data from the bank and collect and build a database together. So that database name is a Clinic. Currently, that every bank have access to that database. So 2013 is started. Because of that, in 2015 or 16 onward, RBI start doing the asset quality review. Before that, RBI does not have any tool to do the AQR. So because of that tool, RBI get this, that which borrower is taking loan from Bank A on 69th day of its default from the Axis Bank and paying to the Bank of Baroda, or taking loan from SBI, paying off the Axis Bank on the 70th day or 74th day. So the clinic system over the last 8-9 years has evolved in a very way. Today you have all the GST data linked to the clinic system. In clinic system, the KYC is still till director level. So suppose I am a director in 7 companies. So if even one of the company where I am director get default, the banks will automatically get red flag that one of this company which you have given a loan have a director out of 7 company and one company there is a default out there. So this type of system which has emerged in the corporate loan, and every week RBI now automatically going to the banking, collect this data from every bank over all exposure over 5 crores and maintain this credit system. So today, any bank, any corporate cannot go and take the loan from one bank, pay off to the other, or every bank have all the data access to the where they are borrowing, how they are lending out. So in this scenario, the corporate and SME part has also improved, has seen a tremendous improvement in underwriting practices over over the last 7 to 8 years, and that has really put both retail and corporate at a very good front. Even if you look from the other listed space also, Indian corporates are not very debt heavy at this point of time. What was the scenario between 2012 to 2014? Our debt to equity ratio of the Indian corporate was very high. This is not a scenario at this point of time. So I clearly see that no, either from retail you take SME or you take corporate, we are not seeing the any credit risk for next 3 years, and that's why the earning growth of the banks will be very good, growth will be very good, and asset quality is expected to remain good quality, unless and something disaster happen here, some missteps we do on a policy front, there will always be on that. So on a credit cycle point of view, we are at a very good phase, and I clearly see only next credit cycle which will form surely, because history always teaches that in the next 4 to 5 years we are going to see the similar type of situation coming in. So at least for next 4 to 5 years, I don't see any major risk coming on asset quality front, and especially credit cycles. We are at a very good period there. Now coming to how to play this whole part of it. So if you look at for 2020 FY23, the key thing was loan growth was very strong for the banking system as a whole, but deposit growth was lagging. Of late, government has done a favor to the Indian banks. What favor? That if you look at debt mutual fund whole issues, the major beneficiary of that will be the Indian banks only, and they are going to see some part of this fund which used to go into the debt market through mutual funds will or no insurance through the 5 lakh and have a premium will start coming back to the banking through deposit or other channels. So deposit problems which which we were facing in 2023 probably will get addressed out there. So going forward, what is important here to look at the banks who have very good quality deposit franchise. Number one, was able to deliver loan growth. So these two are very important. You are able to deliver a loan growth with good quality and have a deposit franchise to bring the deposit at a relatively lower cost. Okay, so when you find these two getting match, we are going to see those banks continue to do quite well. Names, in my view, this is not going to be the scenario between 2016 to 2020 where the only private banks perform, public sector banks don't perform. We are going to see both private and public sector banks performing it, which was a scenario between 2003 to 2008. So both public and private will participate in this sector growth which we are going to see, and because public sector banks has a very good deposit franchise, so they are also going to get good share of this growth which is coming to the sector at this point of time. So I see equal opportunity between both public and private at this point of time there. And now coming to a specific pocket, like Prince asked about, whether to any specific segment where you find good opportunity to coming in. Two segment I am very positive within a asset side of it. One is microfinance, another is commercial banking finance, CV finance. Why microfinance? So in last if I say 6 months, I have had a word with so many microfinance guys, listed, unlisted, and especially from unlisted space. I have not find the cheerful face of them in the last 7 years. Why this has happened? What changed for microfinance? We all used to see a lot of credit cycles coming into play, a lot of issues coming into the play. What has changed in the microfinance? The biggest change has taken place that in the last last year, RBI come with a proposal of or simplifying the regulation in the microfinance. So there were a lot of restrictions in 2013 put on the microfinance in the terms of how much they can earn, how to operate. There are different set of regulations for the bank, different set of regulations for the NBFC, MFI. So they harmonize all these rules for the banks and MFIs together. Now they have to assess the household income. There is no cap of 10% on the interest rate, and on the NIMS front, and instead of individual income, now they can disburse a loan on a household level, and the data. MEFIN data will be now bank and NBFC both will be reporting to the MEFIN, and that's why credit practice will be followed across the banks and NBFC as an equal footing. Not the bank used to follow different practice, NBFC used to follow different practice, and that's why what you have seen, if I'll just tell you, that the guys who used to be totally opposite of a microfinance, now are talking about entering into microfinance in a big way. So if you go back and see what Rajiv Jain used to speak in 2016, 17, 18, whenever you asked to, sir, you will enter into microfinance business, he used to like, so that is a crap, I will never. When you ask Uday Kotak, he used to say, no, it is a crap business, I will never enter into the microfinance business. Today, go and see both the institutions. Both the institutions are aggressively into the microfinance. They are building the microfinance books in an aggressive way. So it's clearly showing that some of the leader of the industry who does not used to like the industry, with now these structured regulatory changes in the industry, are we clearly seeing that this sector is going to perform very well. So I clearly see microfinance players both in bank and NBFC area is going to see a very good earning trajectory, especially within the whole sector. I've said that they will be performing one of the best in the next 2.5, 3 years, despite we have a general elections or whatever we are going to see. Because of these regulatory changes, and even on a ground level, now borrowers also have understood it, that no, if they will default one or two, then they cannot get in their life from loan from other any other loan, and then they have to resort back to the money lenders. So this type of the what you say, the time learning among the borrowers also has come into the play in the whole segment. So I clearly see this segment is going to see a lot of change. Second, earlier microfinance used to be the cash business. They used to distribute cash, they used to collect cash. But with the UPI coming into the play, now the payment and collection both have, to the great extent, not fully, to the great extent, has moved to the non-cash side of it. So the operating cost of doing business has also come down for them. Well, they used to have earlier weekly meeting. Now they have mostly moved to the bi-weekly or in a 50 fortnightly meeting or monthly meeting, and a lot of structural changes has taken place this end. So this is the segment which I clearly a very positive part of it. Another segment where I clearly see very good growth coming in is a commercial vehicle segment. The CV segment, we are seeing a very, very strong growth, given the way Indian road infrastructure is improving. And next 2 years, we are going to see big changes in the Indian road infrastructure. So, our export economy is also growing in a big way. So the CV's part of the business is also expected to see very good. And there are very some specified players who are very good at CV, both on NBFC and bank side of it. So, individually, these two segments I clearly see good growth coming in with a very good margins. Like a home loan, growth will still remain healthy, but margin is always questionable. But in the microfinance and the CV, we are going to see a very good growth with very good margins, very good ROE and ROE from these businesses coming in. So any banks or NBFC having the higher exposure to this is going to see a very good performance in the future. Yeah, Kaushik.
Yes, sir. Sir, this is question regarding you have spoken a lot about on the UPI development. So, can you actually tell the story how UPI came into existence in India and what was the actual genesis and the skeleton behind it?
So many times it's public, it's a little bit difficult to put, but I'll try to put forward two things that the whole UPI story about this. So UPI was there in existence from 2000. 13 onward, but none of the banks were using it, and mainly Visa and uh, Mastercards were dominating the Indian market and out there. But during post demonetization, when Saktikanta Das was the finance secretary, he was trying to convince lot the Visa and Masters card to bring down their cost, but they denied. They said that no, we are not going to bring down any intermediation or transaction cost. And then at that point of time, Payment Corporation of India came to the finance ministry and presented that there is already Indian system, but bank are not using it. So because bank are not using it, and they are not promoting our systems, so we have to rely upon the overseas system. So at that point of time, current RBI governor and the finance secretary during the demonetization period, Saktikant Das went through the whole thing. He gave this presentation to the prime minister, and then the formal push from the prime minister started coming in. And there where we start finding that when all banks started promoting UPI in a bigger way, and then when Saktikanta Das became the governor, he took his he was very strict on all these Mastercards, Visa. You have heard about, they all were banned for some or other period in India because of the data integrity, which India don't used to enforce earlier. They used to just not follow these rules very strictly in India. Mr. Das literally forced them to follow it because India developed its own payment system, which is like no in the world only few countries have their own payment system, like US have, China have, India have. If I say in the world, only three major countries which have their own payment system, and this and there is a no cost associated to, even if a lot of WhatsApp you have got today or last few days about that there is 1.2% charges on the UPI, but those are on the prepaid instrument, not on the normal bank to bank transfer UPI transactions. It has a prepaid instrument because UPI credit card is coming in, so that the UPI credit card need to have some cost associated to it, and there where all these changes in the UPI is taking place. No bank to bank transactions is going to get any type of cost or on the UPI front. So UPI remain one of the most important part, and not only this part. Today, a sabji wala guy who receive maximum payment from the UPI, he earlier bank never used to fund him because there is no history of his banking records. Today he has a banking record to show that he is getting so much of earning on daily basis. He is paying off to this guy. So they have become also bankable customers. So customer base also is getting expanded because of the UPI. Collection cost is coming down. Today you don't have to go and collect. You just have to send a request through UPI. You can collect the payment from them. So whole infrastructure associated with it, either on the credit underwriting side or payment side or collection side, has improved substantially. Yeah.
So Ashutosh, like obviously, guys, the stock specific discussion, if
Yeah.
happen, for example, sake, should not be construed at any
Yeah.
sort of investment advice. So the HDFC and HDFC Bank merger, how you see it, and I mean, namely the two three banks, HDFC, Kotak, Axis, haven't performed. The level which they used to. So what could be the potential reason, and how you see them going forward from here? I mean, are there any what we say challenges in place, or what exactly you see in those kind of banks?
Okay. If you look at HDFC Bank specifically, this merger is a very positive for them from the ALM perspective. Why? I'll just explain in 2 minutes. So, in case of HDFC Bank, if you look at they have this. Uh, the duration of their portfolio used to be very low because they were mainly in the business loan. business loan, credit card loans, vehicle loans, all used to have less than 7 years of the terms. So average duration of HDFC portfolio used to be between approximately 3 plus minus 3 years, something like that. Similar type of banks, if you look at Axis SBI, who have a home loan portfolio, which is a 20-year portfolio, was having a duration of much higher than the HDFC Bank. So what was the impact of the same? To deliver 18% growth or 17% growth, HDFC Bank has to run lot more, has to uh, disburse much higher amount of the loan compared to the normal banks. If suppose disbursement growth in the all the bank does not report it, but I'm just, if the disbursement growth of 15% will deliver 18% loan growth in the case of ICICI Bank, HDFC Bank has to deliver a disbursement growth of 22-23% for delivering a 16 to 17% loan growth because of this shorter tenor part. So now HDFC Limited coming into their fold, their portfolio will get aligned with other banks first. Second, they will become manufacturer of the all major products, so all HDFC Life, HDFC, the whole like ICICI Bank used to have all these financial business subsidiary along with its Kotak have all these subsidiary. Axis also have to the great extent many of these subsidiary around it. So now HDFC Bank will also have all these subsidiary around it. So the cross selling opportunities and other will improve for them, and on the portfolio quality. Otherwise, also this home loan, like I just explained earlier, no, this the HDFC Limited home loan portfolio is of very good quality. So that will also have a positive impact on overall performance. This what is on a negative front, they have to do the priority sector lending. They have requested RBI to get some relaxation on that front, and on SLR front. If RBI gives some relaxation, that will be very positive. And I think out of 7 to 8 requests which they have put for relaxation to the RBI, probably for 2 or 3 RBI will accept, in my view. They will not accept all the requests. Like if I go back 20 years back in the case of ICICI Limited merger, also no, they have accepted few requests. They have not accepted all. So if some relaxation come on the priority sector or SLR, that will be added some positive surprise in the case of HDFC Bank. So post merger, I clearly see HDFC Bank to be in a very good situation to take advantage of what is happening. Their CASA ratio is at a very healthy. It will dip slightly post merger, but given the branch networks they have and the whole system which they have put in the last 20 years is one of the best sales system, if I say, not IT infrastructure but sales system, especially on the loan generation fund, is a very good for HDFC Bank. And in the current scenario, I clearly see them taking advantage of it, and all the major concern will get addressed the time when this merger will finally takes place. So from current situation, I clearly see HDFC as a good investment opportunity. I also see Axis as a very good opportunity from here. Axis is a good opportunity again. The reason is the similar type of improvement which ICICI Bank demonstrated between 2015 to 2019. Axis in the similar situation. From the last 1 year, we are finding the return ratio and earning profile of Axis Bank is improving, and that trajectory will continue. And that's why the valuation gap between Axis Bank and ICICI Bank or HDFC Bank will slowly, come down. Not it will not go away fully, but it will come down. And there where I see, both strong earning growth and slight multiple improvement, both in the case of Axis Bank from here. So Axis Bank is another good opportunity in my view from here perspective on the larger bank front. Yeah.
All right. And Ashutosh, like
Sir, is it important
yeah.
for every? It's on a. Go ahead, Prince. Go ahead.
कोई नहीं, मैं बाद में पूछता हूँ कौशिक, you go ahead, no issues.
Yeah, thanks. Sir, on this portfolio front, so do you think every portfolio should have one bank at least in his portfolio? Is it needed to have an banking in the portfolio terms? And if it is needed, what do you think at current valuations or something that you are comfortable sharing, which are like good, looking good? As you told already, access. Any other than that in the mid cap and the small caps?
So like I say, MFI and other parts, so definitely you can look at IndusInd, which has MFI and CB both. On a pure MFI front, you can look at Credit Access Grameen. That is very good company to look at. Okay, if you pure CV, if you want to look, then Mahindra and Mahindra Finance has done. It's clearly showing a lot of improvement. You have Chola Mandalam is one of the best company to look at from that angle. If you want to play something which is very unique in a housing, then you can look at Avas Aptus type of story, which is very unique in a housing and especially focused towards a unorganized segment which is not being serviced by the bank. So these are few of the opportunity which is very good in banking, and which question whether everyone should have the banking in their portfolio. I think bank will be there. Going forward, we are going to see good earning growth in the bank. So even a retail investor, part of their portfolio must be there in the bank, and they can diversify between one or two large private bank and one or two smaller private bank and one or two public sector banks in between that. Public sector banks, I will always prefer the larger name like SBI, Bob, Canara, BOI. So these are doing fairly well at this point of time. Yeah.
So, Ashutosh, like another reverse merger happened lately. So, what all should we look for in such circumstances so as to decide whether the situation is investable or not?
So whenever reverse merger type of scenario comes into the play, especially initially is always being negative because a lot of uncertainty comes into the play out there. And another important factor to play is the IT system integration. And in the case of HDFC Bank, there will be no major issue on the IT system integration because HDFC Limited does not have the deposit franchise where the IT system integration is the major issue. And a home loan platform, they can easily integrate out there. This is much easy to integrate the whole home loan portfolio. So if you look, there are opportunity on reverse merger side of it. We have seen in the case of IDFC First Bank, IDFC Limited type of thing. Then there is we have seen Equitas doing quite well post this merger out there. We have Ichiban where the reverse merger scenario is getting emerged, and these are also in a very growing part of it. But yes, I have not done very detailed work in few of them, the name which we have done, but we can look into these banks also out there. And merger scenario will continue to arise. I think, but whenever the merger announced, at that point of time, it is not right time to enter. Once the merger, if you look Kotak trajectory also, when they acquired the bank, for that 1.5 year they didn't perform. Post acquisition, when the whole acquisition get completed and they start taking benefit of it, then there the bank's performance comes into the play. So I clearly see this. Whenever this merger get announced, and that is not the right time to invest, but wait for a year or so to complete this whole transaction, and post that you can go ahead and do that.
All right. And at current point in time, how you see the gold finance thing, and because many banks are also jumping in, and the previously existing companies, how you see they have also not performed quite a time. So, do you see any traction in the space?
So, if you ask me, I'm the most negative on the gold finance side of it. The reason is why is basically no. If you go and see maximum of these standalone gold finance company used to always say that no, their main USP why the borrower come to them because they are able to disburse the loan within an hour. Today, because of the change in the whole process, banks are able to do the similar. Banks are able to disperse the loan in a hour time. Whereas Muthoot and Manappuram of the world is dispersing at 20% plus rate, banks are dispersing at a 12-13%. Even some banks are giving at 10-11% also gold loan. out there. So there's a huge difference in the rate, and the turnaround time from the banking side has improved. So that's why you have seen that bank is taking a larger chunk of the gold loan. We have seen in the case of Federal Bank, you have seen this Catholic Syrian CSB Bank. Those Karur Vaishya, South Indian, and even in the case of larger bank like HDFC and SBI has also seen a very strong growth in that portfolio. But in overall pie, that doesn't contribute in a bigger way, so that they don't come into the face. But I think this business is being now getting captured by the banks in a bigger way. Today, IFL is doing large chunk of gold loans for the bank, so they are just intermediate in between that. So they just manage the whole transaction for them, and the balance it loan sit into the bank balance it. So this is called a co-lending arrangement out there. So I think individual gold loan companies are not at a very advantageous position, and that's why in the last 2.5 years, if I say the first 6 months of the post-COVID, they have performed very well. Post that, they are not doing it. So I clearly see this space is being getting eaten out by the bank, and only hope or positive things will come for them if the gold prices start rising up again, and probably because of that, if they start seeing that improvement in their disbursement, then it's okay. Otherwise, their tonnage, if you look at Manappuram Muthoot numbers, their gold tonnage has not increased in the last 3 years. So the similar tonnage, they're just trying to recycle the loan on the same gold holding from the customer which they have. So I see relatively very less opportunity for these companies.
राइट. सो वी ऑल्सो हैव वाजपेयी जी. वाजपेयी जी, आपका भी कोई सवाल रहेगा तो प्लीज फील फ्री टू आस्क. एंड वन स्मॉल क्वेश्चन, आशुतोष जी, before I come to Vajpayee ji. So Ashutosh, management in the bank is the most important thing to look for. So the change in management is always a very, very big event in case of banks, and recently we saw that in the case of South Indian Bank. So what's your view? What is a holistic approach to see the change in management? Because it could be a possibility that another person who is replacing the existing management can do better also, right?
Yes. So like why this concept has come. So like I can give you example of IndusInd Bank. IndusInd Bank has got the license at a similar time when ICICI, IDBI, HDFC Bank got license. Okay, but from 1994 to 2007, it has never performed very well. When Mr. Sopti took over in 2008, no, and then rest of all remain history. It is one of the best multi-bagger bank from 2008 to 2018. He made a mistake in the latter part of his career, and then that's why we have seen the sharp correction into the bank. But yes, the journey from 2008 to 18 was one of the best journey if you can look from that point of time. So top management play a very, very important role. Like in the case of Yes Bank, the excessive ambition of Mr. Rana Kapoor resulted into the such a huge problem for the bank out there. And in the case of HDFC Bank, the risk management practice which Aditya Puri from starting tried to put forward has given a very good dividend to the in the case of HDFC Bank. So similar in the case of ICICI Bank, when Sandeep took over, it was market has seen this as very positive. And just now when Anu Bagchi, they appointed Anu Bagchi as a head of ICICI Prudential Life, market responded very positively with that news because Anu is was head of ICICI retail banking, later head of corporate banking, and he's known to be one of the most innovative guy in ICICI bank group. So top management is a very important point. We need to look at how they perform, and especially last 2 years, RBI has also got realized its power on appointment of top management. First, they come out with the regulation that nobody can serve more than 15 years into the bank, and then similarly, like they cut short the tenure of RBL Bank MD and CEO, and even in many cases, they where the board is requesting for a 5-year term or 3-year terms, they are just giving 3-year terms or 2-year terms. Whatever board is requesting, they are giving second term relatively lower than the what they are requesting in. So management change is an important point to watch out for. A dynamic management at the top really make a lot of difference. Today I discussed Axis Bank. Axis Bank has seen a sea change in the whole business process in the first 3 years of Mr. Amitabh Chaudhary, and the result of that is what started to play out from the last 2 quarters and expected to play out further. So management is important things to watch out, and whether we have any specific answer who will be doing good or not, we can always guess. But first, no, few quarters you have to closely look at what new management is trying to do, what type of system is trying to bring in, and that's important to watch out for. Yeah. So even in the case of Federal Bank, like only South-based bank which are able to set its union system, or no, not set its union system, but make it ineffective, was Federal Bank under Syam Srinivasan. So he managed the union as well as the growth of the bank, or no rediscovery of the 100-year-old bank is a unique case. So management play a very important role out there. But any specific answer to identify the management in the bank, it's very tough. We need to wait and see how the one bank is doing it, and then we have to take a call on. At one point of time, we all were praising Sobti so much, but when 2017-18, when the ILFS crisis hit, we all were blaming him also. At one point of time, we were praising Rana Kapoor so much. At another point of time, we were blaming Rana Kapoor also. So no, similar to with KB Kamath of ICICI Bank, I can give example of. So management is important things to watch out. But is there any metrics by which we can do it? No, you have to be closely watch the bank. We have to look quarter on quarter and then decide how to proceed on that.
Right. Kaushik, I'll come to you. Before that, let me check with Vajpayee ji, has been waiting a small.
Sure, sure.
तो आशुतोष जी, आपने काफी अच्छा डिटेल में एलोबरेट किया पूरा बैंकिंग सिस्टम के संबंध में। तो दो चीजें से आपने, एक तो मैनेजमेंट के बारे में बताया कि मैनेजमेंट के चेंज होने से चीजें चेंज हुई, और इधर आपने बताया कि जो ऑटोमेशन हुआ है उसकी वजह से एनपीएस पे कंट्रोल हुआ है। तो आपका क्या मानना है कि मतलब ये जो एनपीएस है, ये स्मॉल लेवल के जो लोग थे इनसे ही ज्यादा होता था, या कारपोरेट के जो एनपीएस थे वो यहाँ प्रॉब्लम क्रिएट करते थे, और कारपोरेट के एनपीएस को चेक करने का या कंट्रोल करने का अब इस समय कौन सा नया मैकेनिज्म डेवलप हुआ है जिससे कि उस पर बैंक कंट्रोल कर पाएंगे?
Okay, so if you look at major portion of NPA has from the last 7-8 years, if I look at, has come from the corporate side of it. Usse pehle, if you look cycle of 96 to 2004, it was mainly retail NPA. That's why every bank stopped giving retail loan at that point of time. So many frauds. लोग एक जगह से लोन लिया, लोग घर छोड़ के चला गया. So there was the credit score system was there at that point of time. Only from 2005-6 onward we start. Only from 2005-6 onward we started building this the credit score system out there. So if you look last 7 years, corporate has seen the major delinquency, and that too, a lot of fraud has taken place in Indian side of it. We have seen and there I forgot to tell one important point of it. You bring very important question, that the IBC. What was there? If you go back, in one of the analyst meet of State Bank of India, they only say that what used to be earlier, that when big corporate used to default, they used to come to these larger banks like SBI, and they used to say to these banks that your loan has turned NPA. The borrower is going to the bank and telling that the loan you have given to me has turned NPA. Now you see what you want to do. These guy used to come into the luxury cars, and bank used to just do and not do anything in this case, because they cannot take hold of their asset. Post the passing of the IBC, now they are able to take hold of the assets. So what the now the promoter of the company is quite fearful that if they will not pay off the loan, they will get default. Today, you have example of G Limited, where IndusInd Bank went to NCLT for one, and the whole process of G Sony merger got stuck because of that. G has to go and settle with the IndusInd Bank. This was not possible before the IBC. IBC has done the tremendous change in this whole ecosystem out there. Now the banks have the right to go and sell, go and acquire, even suppose bank is not able to get any value, it will, like in the case of Reliance Capital, bank may not able to get any major value, but the company has gone away from the Anil Ambani's grips. If I say that there is a very good running Reliance Securities, Reliance Life Insurance, Reliance General Insurance, these are very good running business within Reliance Capital. These are very good quality business, and that's why people are giving bids of 8,000, 9,000 crore rupees still for that business. But promoter cannot hold. Similar SR went at one point of time in IBC. SR went tried to pay off full to the bank, but bank say no. Even in the case of the Vijay Mallya case, if I say the Kingfisher, bank has recovered their principal amount, because this whole IBC system has totally changed the operating environment on the corporate side of banks, and that thereby I clearly see that the systemic changes in the credit cycle. If I ask, the systemic changes is a much later. We have just come out with a cleaning up of the corporate side and shaking up of the retail portfolio post COVID. What happened with the post lockdown? So we have just come out with the quality checks on both corporate as well as retail front. So on a credit cycle, we are in a very good place.
ओके ठीक है कौशिक जी आप प्लीज कंटिन्यू करिए आप अपना क्वेश्चन रखिए
Okay, thanks. Sir, I just wanted to understand a couple of more viewpoints apart from the banking system. There are I'm talking about an IT sector. There are like a lot of companies who are exposed, like emphasis was exposed towards the banking system of US. So, what do you think about the banking system which is affecting the IT sector now currently?
So coming to no, if you look at Indian IT companies, they're major part of roughly 40%. If I say the large IT companies, between 30 to 45% of their revenue comes from the BFSI segment at a global level. If these banks started spending less money on their IT infrastructure, then probably the growth in these companies will get impacted. And if the growth get impacted, the whole earning cycle will start getting impacted gradually. So that is the risk. But if you look, that's why I say in starting that I don't see 2008 type of situation similarly to the banking crisis. It will be more coming from the currency side of it. So I don't find that if you look at the recent number coming from the even US, we are not seeing any major slowdown in the spending by these banks. Yes, there will be some slowdown. Surely there will be some slowdown. But Accenture numbers, if you look, they are consulting side they have witnessed slowdown, but outsourcing side they continue to see good flow continue to be there. So I see there will be some impact, but it will be not very significant. There are many other things which is happening for the Indian IT sector at this point of time, which will have a positive impact on sector as a whole. But most important parameter for IT sector, which I look, is that how Nasdaq is going to perform, and Nasdaq is highly correlated to the interest rate movement. When interest rate was going up, Nasdaq come under substantial pressure. if any problems, today we are talking about, the Fed will not increase rate, or it is the last few increment by the Fed, and probably in the next 1.5 years, if even if the as a Fed projection we are start seeing some cut, if the inflation starts softening, then probably no Nasdaq will start again no participating in this whole cycle. Even the restructuring in the China, which has taken on Alibaba front, is positive from that perspective out there. So I clearly see there will be some slowdown in the business flow from the banking segment of Indian IT company, but it will be not very disruptive, at least for the next 1.5 years. Post that, we need to look into it. There are a few good opportunity in Indian IT sector to invest in, and there we can focus, and we can really lot of innovation is also happening. Like if you look today, talk to any of the global banks, the type of integration or type of innovation which is taking place. So the IT sector involvement will remain quite large, and business will continue to flow to them.
Sir, I have another question, which is regarding to like you spoke about the gold loan sector. Sir, you might be knowing about Rupek as a company who is from South India. They are like trying to reduce their turnaround and also giving up to 90 percentage of the gold value on the current market basis. They've actually tied up with Federal Bank, South Indian Bank, and Karur Vaishya Bank in South, and they are taking this access to reach out to the clients and uh, giving them loans as well as creating a new category for themselves. So, what do you think as this kind of a startup company who's coming and doing literally great on their numbers? If you see this quarter, whatever the numbers they posted on their MCA website was also literally very great. So, what do you think about this as a scenario, sir?
Yes, we will see some of good opportunity coming from that space too, because if you look currently, the IT part of spending, banks are now moving to more of a revenue sharing part of it, where bank is ready to share the revenue, and along if the business grow from the product or services which any of these companies are offering in. So I see, if I have not seen the product part of that company, what how they are offering it, and what type of things they are offering it. But clearly, there are many companies which will emerge. The way whole ecosystem is developing in the fintech ecosystem is developing, we are going to see clearly very good opportunity coming out from the few companies. Because I have not done any detailed work on that, so I don't want to comment much there.
Got it, sir. I just wanted to give the complete scenario here. A lot of banks or any other person will take actually the loan from the it's like deposits from the client or the loans from someone else, and then they sponsor the gold loan. But when it comes to Rupek, they are diluting their equity and diluting their equity, and then that the funding of equity has been funded for the gold loans with the but the deposit of the gold will be kept in the three banks which I have mentioned. So is it equity funding on an loan? Is it a good thought? Because we have seen Bajaj Finance, they're literally not so highly leveraged on balance sheet basis. But is it something like can also happened in this kind of startup company?
It can happen. It can happen surely out there, because but only thing is that no, we have to look that there is a one big daddy in the room, that is RBI. Okay, if suppose this fintech lending part of it, RBI has come heavily on many of these fintech in the last few months. If I say last 8 9 months, lot of regulatory changes has started taking on a fintech front. So the product is the way you have explained. Product is very innovative, but I need to really look in detail about whether any, because you have to also look for risk coming out from the regulatory part of it. In normal business, we don't see the regulatory risk emerging much, but here we can see the regulatory risk emerging, in especially in the banking side of it. Yeah. Okay, so if you look at one major negative which has happened for the insurance sector was basically this the government making a default tax system to the new tax regime, where there is no incentive under the 80 or something like 80C is there, and then they have also capped this that any premium of 5 lakh and above at annual level will be the income coming from that policies will be get taxed out there. So these two came major negative for the sector as a whole, and that's the why on the budget day we have seen this sector coming under tremendous pressure. From here, I clearly, if you look, there is still a very good growth opportunity for the sector as a whole, but no, some more time correction sector will witness. We need to see how this whole, the new sales system will emerge into the insurance because of these changes in the regulations, especially the tax laws. In India, insurance is being predominantly sold as a tax instrument to save the tax, and now that thing is slowly going away. That will have a impact on the performance of the sector, and that's why I will wait and watch how the whole tax regime in the insurance sector emerge over the next few quarters, and post that take any major call. If you take the example of you have taken example of LIC. I think in LIC there is a major overhang of two things which is literally impacting the performance of LIC is what that everyone is saying that there will be another stake sale by the government because only 5% stock has been there in the market at this point of time, and they have to take to it to 25%. This is a very large issue, and no constant selling by the government in any stocks will literally impact their whole supply demand scenario of that stock. We have seen the many public sector banks stock getting impacted by that. IRCTC in the past, if you can go and refer to that similar type of thing, which was a very star company post listing, but when the government starts selling the stakes, then suddenly that stock come under the pressure. What business change LIC is doing, and what I will be closely watching in the case of LIC. If you look at LIC is mainly selling the traditional policy till to today. Their term policies, no, they were not very aggressive in the term policy. If you look at profitability of insurance companies as equity shareholders earn more and more money when the insurance companies sell the term policy. Because if person survive the whole period, all money will goes to the insurance company. So the insurance company equity shareholder earn much more higher when the company is selling more and more term policy, and that's what a private player like HDFC Life or ICICI Prudential Life did it. We need to see how LIC has launched the product in that area where they are competing with many of these private insurance on this front, but still it is in a nascent stage. So we need to see how really they are going to deliver on this growth in their the non-traditional policy, especially in the term policy, which is going to have a major impact on their the similar to the we call it embedded value, which is basically a two part. One is the net worth of the adjusted net worth of the insurance company, and the discounted future profit of the insurance company. So we are going to see a more positive impact coming on the LIC because of this. Another market is also taking negative on the LIC because the in embedded value of LIC. There is a lot of impact of the stock market performance because embedded value is getting impacted because of the market performance. So when Adani issue happens and all other things, a lot of rumors start taking place here and there. Even before that also, market is now continuously coming down from the last five, if I say that 4 months out there. So if overall market performance also improve, it will also have some positive impact on the embedded value of the LIC, not to the great extent, but why I'm telling it, because if you look at the embedded value journey of LIC, it is very unusual. There was a many question in the IPO time on that, and investor needs some time to digest in a sudden increase in the embedded value between 2019-20 to 2022 embedded value, which went almost, if I say that, 7-8 times increase in the embedded value, because of the change in the whole accounting and other system. So I think uh, in the case of LIC, it will take some more time for market to accept the stock and move ahead from here. But if you ask me, someone looking from the 5-7 year value, I think it's a good opportunity for that. But short term, the stock may remain underperformer.
Right, and our attendees must be enjoying this wonderful conversation. Please check out handle of Ashutosh sir and connect with him so that we can request him more and more times to come and share his wisdom. So Kaushik, any other questions on your end?
No, no, Prince. One question I think so. Someone was trying to ask. I think it was Chirag, but we are not able to approve as a request. That's fine. I think from my end it's ending.
So, although we can have much more discussion because it's a large space and constitute a major part of the index, but again, we restrict our talk till here today, and surely we'll have part two of this, Ashutosh sir. So, before we close, any other good sectors you see which are investable and clubbed by your closing remarks?
I want to add one more thing here, sir. If possible, what do you hold and what do you think about the current situations?
So I clearly see no good opportunity coming into the capital goods consumer durable sector. I see no, the India is clearly moving. The income profile of Indian household is changing from the no as an individual, our salary is also going up as a, and the two people earning and one kid with a dink type of the concept is coming. So the spend on a consumer durable is increasing. So there's a lot of opportunities happening on that front. I see a good opportunity coming in from the capex cycle, which is now really start reviving it. If you look the news articles of the last 2 months, a lot of things is happening on the capex front. So a lot of opportunity is going to come on that front. And third, I clearly see the infrastructure side of it. Post budget, market has ignored this whole huge spend on the infrastructure by the government of India. I see a few good quality companies, although this is a bit tough to select good quality companies in that space. But there are a few good quality companies which can really give no a handsome return in the infrastructure part of it. Yeah. Yes.
Right. So thank you once again, Ashutosh sir, for your time and agreeing to our
Thank you,
request.
Prince.
Really wonderful and exhaustive. Although we would have loved to listen more, but again, it's almost 90 minutes and you're talking. So surely we will have a second round of this, and date we will announce accordingly. So thank you so much, and guys, please feel free to check out his handle so that you can get access to more wisdom. And again, surely next time we will also do a temperature check on other sectors. I think today's session was a great value addition to you also. So if you are liking our work, you can connect with us so that when we bring more people, you can also listen to them. And one request, like this session is recorded, and I'll be uploading this over my YouTube channel. So those who are yet to subscribe, they can surely subscribe to the channel because all the recorded sessions are placed over it so that you can revisit in case you missed any part of the great conversations we have. So, Kaushik, thank you so much again for your great questions and being a co-host and introducing me to Ashutosh sir. Anything you want to say about him?
Nothing, Prince. I have learned a lot from Ashutosh sir. So it's been like learning is in Jacob for me with Ashutosh sir. And thanks for coming here and sharing your knowledge, sir.
Thank you.
So,
Thank you, Kaushik. Thank you, Prince. Yes,
Ashutosh
sir.
sir, before we close, any feedback on our spaces or any suggestions so that we can also improve on that?
Uh, I will give you if no on if, just I don't have I'm too much exhausted in answering and speaking at this point of time. Probably in some
Sure,
time
sure.
I yeah
I'll
yeah
connect
yeah
offline for that.
yeah yeah
Thank you
yeah
so
yeah
much.
yeah
Thank you.
yeah
Thank you.
yeah
Thanks
yeah.
again for your time. Good night. Take care.
Thank you. Thank you.